16-4 is going to be all about the recording of closing entries for an income statement accounts. So we're going to learn 4 different closing entries. The first one is going to focus on closing entries for income statement accounts with credit balances. So anything in our adjusted trial balance that I'll show you in our APLIA problem that has a credit balance on the income statement. So if you recall doing this, I don't know how many chapters ago, this is our debit and credit, the adjusted trial balance, and anything below the account of income summary is considered the income statement accounts. So basically it's anything to deal with sales, with purchases, and with all of the expenses. So this is kind of that magic line, the income summary. So anything below that is our income statement accounts. So sales is a credit balance that we have to close out. And remember, closing out means to bring it to zero. Purchase discount, purchase returns and allowance, and interest income. So that will be our first closing entry. The second one is closing entry for income statement accounts with debit balances. So this is going to be a lot. So all of the debit balances, so we're looking at the account of income summary and below. So income summary is here, basically anything below that. So anything to do with sales discount, sales returns and allowances, purchases, all the expenses, all will be credited to bring these debit accounts to zero. The third one is a closing entry to record net income or net loss, and the fourth one will be entry to record the dividends. So we're just going to kind of go step by step in APLIA. So here is the 16-4 work together. So we're going to start with step 1. There's 4 steps. These are the 4 closing entries right here. The first one is credit balances. So remember, we are looking then, we have the adjusted trial balance, we have the income statement, we have the statement of stockholders' equity, and the balance sheet. So for this first one, credit balances, like I just showed you, we are looking at income summary and below, and only the accounts with credit balances. So starting right here with sales. Down here are the directions. We're using Superior Corporation's trial balance and financial statements to close out the income accounts with credit balances. So here's the general journal. In the PowerPoint and the notes, it does show you how to journalize each one of these closing entries. So they already put this title for us, closing entries, right here. We're going to use the end of the month, end of the year, so December 31st. We're going to be debiting those 4 accounts. And remember, it's to close it, you're basically dumping it into income summary. So we're going to debit sales, purchase discount, purchase returns allowance, interest income. So it brings the accounts to zero, and then credit income summary. So go ahead and do that in this closing entry, and then I will show you the answer. So here is the answer. The date is the December 31st, like I said. You are listing the 4 accounts that had a normal credit balance and making them all debits. So sales, purchase discount, purchase returns allowance, and interest income. Add those 4 numbers together and credit the income summary account. And again, where did I get that information? Adjusted trial balance. Scroll all the way down, and all the numbers are right in the credit side. Step 2 then is going to be closing entry for the income statements with debit balances, like we mentioned. So I'm back into the PowerPoint. This is showing you what the transaction will look like. You are going back into the adjusted trial balance, and you are finding all of the debit balances. So it's anything under income summary. So the income summary account is right here, and you're looking at all of the debit accounts here. So starting with sales, discount, and below. So when you start this second transaction, the first thing you're going to do, as it shows you here, is you're going to put the date, the 31st, you're going to put the account income summary, because that's going to be your total of everything that's going to go in your credit. So you're going to start with income summary, and then you're going to list all of the accounts, starting with sales discount, that have a debit balance, and you're going to credit them all. So go ahead and do that one, and then once you get them all the credits, you'll add them together, and you'll put the income summary total as your debit. So this is what this transaction will look like. Like we said, income summary should have been blank until you filled all of these in, from sales discount all the way down to federal income tax expense. Then you add this entire column up to get the matching debit amount for the income summary. So in other words, you're dumping all of these into income summary so that they have zero balances, which means closing them out. The third closing transaction then, if we go back here, is a closing entry to record the net income or net loss into the retained earnings, basically is what we're doing. So if we scroll to this slide, closing entry to record net income, you're going to have the date, the 31st. You're going to debit income summary, credit retained earnings if we have a net income for the amount in the net income. So when we are here in step 3, we're on the income statement, and you're looking at the net income after federal income tax, and you're finding this amount right here, $73,148.80, and the transaction then will look like this. 31st is the date. We're debiting income summary because we had a net income for that amount of net income, and we are crediting retained earnings. So we're basically essentially dumping the income into retained earnings. If that had been a net loss, these two would have been opposite. We would have had to debit the retained earnings, credit income summary. But with net income, debit income summary, credit retained earnings. So that is your third transaction for closing entries. And the fourth and final closing entry is to close the dividends account. So you can go back into the adjusted trial balance and look for the dividends. Remember, do not look at the dividends payable, but you're looking at this dividends account right here, this $12,000 amount. And I'm on step 4, the dividends. Excuse me. And you are going to look at this slide for the entry. And it shows you to use the ending date, 31st again, debit retained earnings, and credit dividends for whatever the amount was in the debit dividends account. And because it has a normal, where is it up here? It has a normal debit balance, you're going to credit dividends so that we close that out to 0. So scrolling down to the last transaction then, you are going to have the 31st, retained earnings, $12,000, debit, and dividends, $12,000 credit. So essentially what you're doing is you're closing the dividends to 0, and you're kind of essentially taking it out of your retained earnings, because dividends, remember, are money you paid out to your shareholders, so it comes away from your company or your retained earnings. So this should conclude these 4 steps, one for each of the closing entries. 16-4 work together, finish this problem, and go ahead and move on to your own problem.